Today should be a pretty interesting day. Fed Chair Bernanke's Humphrey Hawkins testimony before the House Committee on Financial Services is today. So I'm sure we'll get some movement in the market today. That testimony begins at 10 o'clock Eastern Standard Time, about 20 minutes from now, although at 8:30 some news started coming out on what he's been saying. So if you want to read more about this, you could go to our blog and read what Kevin has to say about Fed Chair Bernanke's comments. So he's always got a good blog up there a couple times a week. So the first chart that we're looking at is the US dollar Canadian dollar Forex currency pair. Let me just show you what I did, what happened, and be done with this one. But look at, remember, we went long here as the market took out that inside pattern at 104.07. Our first profit target was 104.59, right up in here. Just missed it. Just missed it. Okay. But as the market pushed up through yesterday's high, and then when the market started reversing down yesterday, I decided to actually take that initial stop loss, which was sitting below the low of that inside pattern, and I decided to move it up to below, okay, the prior day's low. Now let me show you exactly. Remember, this was yesterday, right? We went long as it took out this high here, 104.07, above this high here, ran up, just missed our profit target. When the market pushed up yesterday morning, after I finished doing the video and the market started to reverse lower, I said to myself, why wouldn't I be moving the stop up to below the low of the prior day? Because if the market comes down and reverses and takes out the low after taking out the high first, which it did in the morning, then we would have what I call the creation of an engulfing pattern, the creation of an outside bar, which is typically a reversal, a short-term reversal at least. So if I'm long the market and it's not abiding by what I'm expecting for the market to do, and it actually reverses and takes out the low, but first taking out the high. I know it seems confusing. I'm tongue-tied a little bit when I try to explain this, but look at the market. Once it took out the high, right, of Monday, right? Once it took out the high right here, and then started reversing intraday, I brought the stop up to below the low of Monday because it took out the high. So if it reverses, and if in fact it does take out the low, that'll be an engulfing pattern. So that's what I did. So I ended up stopping myself out of this trade at 103.75. 103.75. Okay, 103.75. I saved myself 22 pips. So instead of losing 52 pips, I lost 32 pips on this trade. So I am flat this market right now. So that is the reasoning behind that trade. And so there you have it. I am out of this trade. Again, a 32 pip loss off of a daily chart. In my book, trading the Forex is very, very, very small. Okay. Now let's move to the second trade that I outlined for you yesterday. And you know, some of you may be asking, well, why on earth would you be going long the TBT ETF, right? This is the TBT ETF on the right, the TBT ETF. It's an interest rate play. I've talked about this numerous times in the last 8 months. And with Bernanke talking, why on earth would you be buying it? Well, the reason is, you know, the trend is up, right? You know, I want to be long this market anyways, right? We've dipped between the mid to the lower band, right? We're sitting there now. As you can see, yesterday afternoon, the market pushed down to my first number, 74 even. Right? Remember yesterday I said I'd be buying it 74 even, and then the next area would be 72.5. So we are long I'm long at 74. The market pushed through that yesterday right here, right? Closed a little above 74 and actually opened up lower today, right? It's 73 and changed. Opened up today at 73.40. We're trading at 73.32 right now. So I am currently long this market, and if the market drops further and even below 72.5, I'll be filled at 72.5. I am just looking to add to this position, if anything. If the market starts to substantially start dropping through that 50 exponential moving average, then I will start reconsidering the position. But what I've just done is I've drawn the Fibonacci retracements from this low down in here up to this high, right? And the 38.2 is actually about $70.22 right in here. So I'd be looking at this area as well. So again, anywhere in this area, should be looking to be a buyer. Again, this is the ultra short Lehman 20-year Treasury bond. So if you think interest rates are going higher, you would be buying this market. That's how you work it. Right now, we've got the E-mini S&P 500 up. As you can see, look at, we are in fact testing the yearly high, all-time high, whatever you want to call this, right? Got a white horizontal line which represents that. The price is 1679 3/4. That is the all-time high. Yesterday we hit 1679.5. The prior day we hit 1679.5. And today's high is 78.5. Very critical area in here. It'll be interesting to see what happens. As you know, the Russell has already broken out through that high, and we're substantially up through that high. The S&P, the E-minis were not, though. The Dow, we're testing those highs on the Dow. And on the NASDAQ, we've been up through the, not all-time highs, but the yearly highs, right? So whether or not the NASDAQ is going to lead the overall market up through the highs, I really don't know. And the Russell is up through the highs as well. So the only two markets that are testing the highs are the Dow and the E-mini S&P 500. So it'll be interesting to see what happens in here, especially with today's talk from Fed Chair Bernanke. So hope today's a profitable day, and I will be back with you tomorrow. Bye for now.